What's up guys, Lewi here. Today we're talking about a financial system that I put in place into my business that really changed the trajectory of even the way I think about money, honestly, and think about money that comes into my business and where it goes and how I operate with it. And it's called Profit First. Now, there's a book that I would highly recommend reading called Profit First by Mike Michalowicz, I think is how you say his name. I can never pronounce it, but the image is right here. We'll put a link to it for Amazon that you can check it out. But the book is phenomenal. I would highly recommend reading it. But what I'm going to do today is kind of give you an overview of what I thought about the book and why I chose to really put this into my real estate business and how it has affected the way that I do things and the way that I've been able to operate and really chase down my dreams quicker than what I was doing previously. So let's jump in. So before I was doing this system, guys, I had maybe what you have. I had two accounts, right, for my business. I had my business checking and I had my business savings account. All the money came into the checking account, everything was right there. I put money from tax into the savings account, and then it all just flowed out from this one account. Everything flowed out, right? All my expenses. And really whatever was left over was what I considered profit. And this is what's known as the GAAP formula, generally accepted accounting principles, right? And really what happens here is we have sales, our commission, minus expenses equals profit. So the profit is what we have left over. After we get our commission checks in and we spend it all on whatever we're spending it on, then we have the profit left over. Now, why is this a problem? Well, because you don't account for human behavior. You don't account for the things you're going to spend money on. And when you do spend money on it, it comes out of this one pile. And then whatever's left over, I guess we'll take that for profit. Now let's flip that around and talk about the profit first formula. The profit first is the same math, but different behavior. And this is sales minus profit equals expenses. Let's say it again. Sales minus profit equals expenses. So the goal here, the difference is we're taking profit off the top and then putting it away and making our business profitable from the get-go, and then whatever's left over, we're dividing that up and budgeting for our expenses. So why is this so powerful, guys? It's powerful because, let's look at Parkinson's law, right? Usually we talk about time with Parkinson's law. The amount of time you allocate to a task is how much it will take, right? So if I say, okay, I'm going to get this task done in 1 hour, it'll take me an hour to do it. If I give myself 15 minutes to get that same task done, I'll get it done in 15 minutes. Whatever time you allocate, the task expands to it. And it's the same principle with money. However much you budget for something is how much you'll spend, okay? So if you're looking at a marketing budget, if you put $10,000 on there for a monthly marketing budget, that's how much you're going to spend. If you break that down into like 7,500 or 5,000, then that's what you're going to spend. So it's the same principle for Parkinson's law in time and money. So let's dive into that problem a little bit more. Okay, so remember we have those two accounts, right? We have our checking and savings account. So commission check comes in and we put a percentage away for tax, whatever that is for you, 15, 20%, whatever it is. And for the rest of the account, for that one pile of money, here's all the other stuff that's going to come out. Lead generation, payroll, websites and systems, auto expenses, food and entertainment, legal services, consulting, CPA, office supplies, brokerage fees, MLS dues, self-development, coaching, marketing, taxes, and we could go on and on and on. And it becomes just a big old mess. You can't keep a track of that unless you're super diligent with like monthly P&Ls and spreadsheets and really know where your money's going. But even then, it's hard to keep a track of it. And it's hard to really just look at a snapshot of your account and be like, okay, cool. Can I take a flight to this place? Can I pay for this expense right now? Like, unless you know exactly what's coming out from where, it's very, very challenging. So what's the solution? The solution is to have 5 different accounts. 5 accounts where money flows in and then goes into the other accounts. Okay, so here's basically how this works. You have an income account. The income account is where the commissions come into. Okay, that's all it's designed for. The commission checks come in there and then they drain out of that account to these other ones that I'm going to tell you about. So really what happens with that account is it goes from 0 to 10,000, whatever the check is, back to 0 instantly. It's just a holding account. It's like an escrow account for the rest of them. Okay, the next account is profit. And this is the percentage that you're going to take for your profit for your business. All right, we're going to talk about how you use that account in a little bit here, but the profit account is the first one that you need to delegate funds to. The next one is tax. You guys know the deal. Don't mess with the IRS. They will get their money somehow or some way. So let's make sure we're putting enough away for taxes. the next account is owner's pay. This is where you're going to pay your own salary from, okay? Now, this is where you have to separate yourself as a business and an individual. Your business is going to now pay you. So you have an owner's pay account. And this is where you're going to make a percentage, and that's the percentage from every single check that's going to go into your payroll account, which I call it. And then the last one, the final one, is your operating expenses. And this is the beauty of this model. We've already taken care of everything else. So everything that's left in that operating expenses account, you can budget for the things you need for your business. But we've taken care of the things that are super important. We're making our business profitable, we're paying the IRS, we're paying ourselves, and then our business from there. So the big question here, guys, is how much percentage do we take from each thing? Well, you can see this graph on the screen right now. This is the percentage that they recommend that you do in the book. It's always a recommended percentage, but I found that these numbers are pretty accurate and really help with the business. So you can see column A there, if you make from 0 to 250K, your real revenue is that income account, so 100% goes into there, and then 5% would go to profit, 50% would go to your owner's pay, 15% to tax, and then 30% for your operating expenses. So let's say your revenue bumps up to column B, 250 to 500K. Again, 100% goes in at first, then from there, 10% goes to your profit, 35% goes to your owner's pay, 15% goes to tax, and then 40% goes to operating expenses. Why have things changed here? Well, your income on your business has gone up. That doesn't automatically mean that you should be paying yourself more, guys, okay? So the money went up in the business, but if we take our percentage down for owner's pay, we still make the same amount of money, but now we can put more funds into the business to keep it growing. And this is a discipline that a lot of people miss, and it's a huge one. Just because your business is making more money doesn't automatically mean that you should be taking more money. If you want your business to grow and become profitable and become something that's going to grow over time, you have to be diligent about your finances. And the beautiful thing about the owner's pay account, guys, is that it builds up over time. All of a sudden, you should be budgeting exactly what you pay yourself every month, and then that account just grows and grows and grows, and all of a sudden, all this money's sitting in there, but you take the same amount out every month. So, if you did no deals one month, you would still be able to live for the next 6 months because you have that nest egg in the owner's pay account that's going to be paying you out every month. Okay, so that's basically how the accounts work, but I want to talk to you about the real special part of this, why it kind of grabbed my attention, and why over the course of the past year, this has just been such an awesome way to work with my finances. So with your profit account, here's what happens. Every quarter, at the end of the quarter, you're going to look in the profit account and see how much is there, and you're going to take 50% of that for your quarterly bonus. So say you have $10,000 in that profit account. At the end of Q1, I'm going to pull it up and be like, cool, we've got $10,000. I'm going to take 5,000 of that for a bonus, and I'm going to do whatever I want with it. Now, if you've got debt and stuff like that, you might just want to throw out your debt, pay all that stuff off, totally. For us, thankfully, we're super blessed and we are debt free. But for us, what we did is we do quarterly trips with our kids. All right, so every quarter now, we take half of the profit account out and we go on trips with the kids. We went to Mexico Q1, we went to California and Legoland Q2, we went to New York Q3, so we're doing this every quarter, and it's nice because the kids can now see that we're working towards something every 12 weeks. So it's awesome because no matter how much you're making, you still have profit to take at the end of each quarter and reward yourself. So now you're working towards like short-term goals, and I break everything up into 12-week years, so I work in quarters anyway. So I always love it because my goals are always for 12 weeks, and at the end of 12 weeks, I take half of my profit. Now, think about something here, guys. It's not the same every time, right? Because if you're doing deals and your Q1, you have $10,000 in there, and you take half of it for your profit, your share, and your bonus. Then you work all the way of Q2, and say you do another $10,000. It's not just that; it's the 5 that was left over. So now you've got $7,500 to now take from your bonus. So this just multiplies and keeps on growing in those accounts. And it's so cool to see it. It's like every single month it gets a little bit bigger, and the things you can do are a little bit better. And for stuff like taking trips, or whatever it is you want to do, Like, it's cool because you don't have to be like, oh my gosh, like, okay, we're spending this much money and we're doing this, and okay, we just need to be careful of this. Like, we'll just take that cash and be like, yo, we're going to burn this. Like, we're going to go to New York with the kids and we're going to live at large, you know, because that's what it's for. Like, that's why we work so hard, guys. We work hard. We need to reward ourselves, all right? So the profit part of this is huge, and it's so cool to make memories with the family. For you, if you're single, it might be, you know, paying off debt, or you could just like throw it into business, you know. So if you're starting to make a YouTube channel, dude, take that quarterly like profit and load it up, like buy a new camera, buy a light setup, like whatever you want to do, just take it and do something awesome with it. So there's a few more things to jump into with this, guys, specifically bank accounts, and I'll do another video on a banking system that I use called Lewi. If you want to check it out, there's a link in the description that you can check it out, because here's one of the things you just need to watch for, right? Remember that first account, the income account, where the money goes in and leaves automatically? Well, if your bank has a zero balance penalty fee, then every time that happens, you're going to get charged. Really sucks. Unfortunately, I used to be with Chase for my business banking. I went to them, like, I funnel a lot of money through their accounts, and I said, hey, I need to open 4 more accounts, so I need 5 accounts total. And they were like, well, no, you can't do that, or you need to open up more credit cards to get this and stuff. And I was like, this is insane. So really have no fees for zero balance accounts, and you can open as many accounts as you want in under your one profile. So super, super cool. I'll do a video like breaking down that entire banking system. But if you want to check it out, there's a link in the description. It is an affiliate link because I've been with them for a while. So if you want to check it out, go for it. If you have questions, let me know as well. But guys, I would really encourage you to read this book, Profit First. It truly changed the way I thought about business, the way I operate, the way I do everything now, the way I spend money on my business, the way I know that, you know, I'm good. Like, I have our payroll built up in an account, so I know we're going to get paid every month. So it takes away the commission breath, right? When you're trying to chase down people all the time, you know, when you detach from the outcome, your business grows a little more automatically. So there's tons of benefits to this, guys. So check out the book. If you have any more questions, guys, feel free to drop a comment in there. If you like this stuff, subscribe to the channel. That'd be awesome too. And I will see you on the next one.